God, what has been happening to centralized platforms in the legacy world and in the crypto world with FTX and Celsius and who knows what's to come? In this video, we're going to be finding out about how to secure your assets and trade successfully in a decentralized manner. But if you decide that you want to preserve your privacy and make sure all the data that goes in and out of your computer is encrypted, then check out NordVPN. My affiliate link will give you something like a 2/3 discount on some of their packages.
TokenMetrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams.
Hi everybody, this is Crypto Rich, working with you to get rich with crypto, filling our pockets with crypto profits. Now, before I introduce our guest, who's going to be talking about decentralized trading and how their project is making it possible, a reminder, please subscribe, follow me on Twitter, CryptoRichYT, join my official Telegram announcements channel. And if you're watching this on YouTube, if you're still watching me on YouTube, please come over to bit.ly/CryptoRichOdyssey. Come and subscribe to me there. It's a free email sign up, no KYC or anything. You may even earn some crypto for watching videos on Odyssey, and you support my work on a censorship resistant platform. There are some videos on YouTube. Well, actually, there are some videos that I can't post on YouTube because YouTube's a little bit sensitive. So you'll get the full force of all my videos on Odyssey. So please support my work there. Hey, Danny, thank you so much for making yourself available.
Brilliant to be here, Rich.
Yes, thank you. You are the CEO or the co-founder of foxify.trade?
Absolutely, yeah, that's right.
Okay, and what is foxify.trade? And I'll have all the links in the description below.
Yeah, so Foxify is a decentralized trading platform with a difference. If you don't know, the way decentralized trading platforms operate, which is very different to centralized exchanges where you trade things like perpetuals and options, is that it's trustless. Now, that term sounds a little bit scary because it's like, does that mean I can't trust it or I shouldn't trust it? When in truth, the way a decentralized trading platform works is that you don't have to trust anybody else. So as soon as you use a central exchange, you hand over your Bitcoin, your ETH, and legally speaking, you've handed over custody of your funds, right? And we've seen this happen over the last 12 months with crypto. It doesn't matter how good you are at trading, how much research, how much education you give yourself. If you're whilst you're in bed at night, if your exchange goes bust, then all of your money, in nearly all cases, is gone. Whereas with a decentralized trading platform, actually, your funds are locked into the smart contract, and there's a very clear set of rules, and the rules cannot change. And there's a number of on-chain services which make sure the assets are tracked in a very accurate and a very fair way, meaning that you no longer have to trust the platform that you've engaged with.
Okay,
it's all smart contract driven.
Okay, so I get it. So I get the risk of using a centralized platform because there's a counterparty risk. They might get captured by regulatory authorities. It might get hacked. They might do what was it QuadriX did a few years ago, where they just shut up shop and ran off with the funds and disappeared. And also BTCE. I had some Litecoin in BTCE many years ago in Cryptsy, and gone with my Litecoin when it was like dirt cheap. Buy Litecoin, right? So there's those risks. And then also the risk of regulatory capture, as the authorities clamp down. And then, like with FTX, we don't know what they're doing in the background.
Yeah, exactly. It's a great point. And with a centralized exchange, there's always three actors, right? There's the person accepting the trade, there's the person placing the trade, and then there's the platform itself. So there's three kind of points there. With a decentralized platform, you're placing the trade, and there is no third party. Ultimately, there's even if somebody wanted to, there's no way somebody can access your funds. All you need to worry about is being a really good trader.
Okay, all right. Well, that's a whole other issue, right? But how can you trade decentralized? I can get how Uniswap and Osmo and Binance, SushiSwap and everything allow for pooling, and they allow you to buy and sell. But trading, you've got to make super fast decisions. Blockchain, even a fast blockchain like Binance Smart Chain or Cosmos, they're not fast enough for trading. It's not instant.
Yeah, but it's interesting actually. So you're getting very close to instant with a lot of blockchain speeds, and so the way it works actually is actually there's two parts to a decentralized exchange, which is really important. One is liquidity providers. So you or I can say, okay, we're going to provide some liquidity, and that acts, if you like, almost like the bank vault within the decentralized trading platform. And then when a trader comes along, they're effectively trading. They're trading against the liquidity within the platform.
Yeah.
So there's kind of two ends to it, and that's the way the system operates. So when you place a trade, and if you apply leverage, you mentioned before, if you apply leverage to a trade, then you're effectively borrowing funds from that liquidity pool. And if you're successful, then obviously you walk away with some cash for your successful trade. If you're unsuccessful, then the liquidity pool wins. So you're effectively trading against the liquidity pool.
Okay. And is that how Foxify works, where I'm trading against a liquidity pool, or is there some other mechanism?
Yeah, it's a great question, and this is where it's with a difference, because there are other decentralized trading platforms, but there's nothing like what Foxify is doing. So on perpetuals, that's how it works, as I just described. But then we have this, we have a unique proposition. It's never been done before in crypto, which is peer-to-peer options. And in that case, actually, a trader can decide to be either the maker or the taker. So what I mean by that, I'll give you an example. Maybe you say ETH moving 1% in the next 4 hours. So block to block, very accurate. You can either trade against that based on a rate that somebody else is offering on the platform, or you could decide to be a maker. You could provide liquidity on that option and set your own rate. So it's a very unique system where actually, rather than just depositing within a liquidity pool, which the traders trade against, you can deposit on a specific option and the market can actually set the rate. That also then creates value for traders because it creates competition on the maker side as well. So maybe you'll say, I'll offer a 2x if ETH moves 1% in the next 4 hours. I could come along and say, well, you know what, I want to take the trades. I'm going to offer you a 2.5x. So it's just offering, it's because we're competing for the traders' funds. Effectively, what that also does is it drives greater value for the trader as well.
Okay, but how does it all work? Is it on the blockchain? How is it decentralized? What?
Yeah.
How does it do? How do you do that?
Yeah, it's a great question, and it's 100% trustless. It means we don't have to trust anybody else. It means that if you're a maker, so you say, look, I'm going to offer you a 2x if ETH moves 1% in 4 hours, and I come along, I'm a taker. Maybe because you've got $100, so you've funded that option with your $100. Now, because you're offering a 2x, you can only mathematically accept a maximum of $50 against that, right? Mm-hmm. Otherwise, you wouldn't be able to cover the returns if I'm successful in the trade. So I come along and I can max out your liquidity and I can place the trade of $50, and then it fits within the smart contract. So you've got on-chain services where the smart contract is monitoring the price of ETH exactly 4 hours to the exact block from when we've entered that trade. The system is going to make a decision, and either Rich, your 100 is going to turn into 150 less fees, or my 50 is going to turn into 100 less fees. And we actually don't charge fees for placing a trade. The platform will only charge fees to the winning side. So you don't. That's how the system works.
Okay, but what cryptos can I use?
It's a good question. So actually, the long-term strategy of the platform is that it's completely universal. So with a system like this, it's infinitely scalable. So anything that you can create a token for, then the system can track the value of that token, and then it provides that environment for makers and takers to trade, to set rates and trade on specific options around those assets. So clearly, we're starting off in crypto because that's our comfort zone. That's what we're focused on at the moment. In terms of long-term ambitions, what it does, it really opens up the opportunity to have a completely trustless Web3 environment that is able to go way beyond crypto. So regulatory compliance questions, obviously, over a long period of time. But in terms of, the sky being the limit, you could be looking at commodities, Forex, stocks, indexes. You imagine a decentralized Web3 version of Robinhood or eToro or IG. That's the level of ambition and also possibility that the platform has.
So you said about regulatory compliance, and I know you're not launching until June, right? Is there going to be KYC on this?
No. So the platform is the platform doesn't require KYC, so you don't have to hand over your details. And that's something that we would have to think about long term if you start looking at regulated assets.
Sure.
But in the initial phases, that won't be required.
Okay. So But what is the structure? How are you decentralized? How is it decentralized?
Yeah, it's a great question, and I think that some people are skeptical of the term decentralized, and which is fair, right? There's always a level of centralization if somebody's going to, set something up and fund it, and then lead the organization and build a team. But it's the technology itself which is decentralized, and what that means is, and typically on an exchange, there's some what we call off-chain services which are monitoring the price of an asset. There's off-chain services which are then making decisions around assets moving in and out and different things that are happening on the platform. Within something like Foxify, that just isn't the case, right? It's all driven by on-chain services which operate independently and autonomously.
Okay, and what chain are you using?
We're very close to making that decision. So we're in discussions with a number of foundations at the moment, and we should be making that decision in the next 10 days.
Okay, so you're definitely going to be on a blockchain. You're not at liberty to say which one it is, as we're recording on this on the 14th of March, right? And I assume it's going to be a fast blockchain. It won't be. I don't think it'll be Ethereum or Bitcoin, right?
Yeah, well, absolutely. It has to be. There's a requirement there. You need you need continuity. You need scalability. You need low gas fees, and you need speed performance as well. Yep. So that's the. I could check. There's a number that you could use that fit within that box. It could be Avalanche, Polygon, Arbitrum, or say BNB chain. All of those would fit within that box.
Right. Okay. And there may be others that you haven't mentioned as well, right?
Indeed.
Will the code be open source that people can check it out?
Absolutely.
Right. Okay. All right. And you have all the links. So now you're launching in June. Are you doing a raise, or is there going to be a token involved for this? How will that work? How will you make your money?
Yeah, it's a great question. And so if I think about liquidity on perpetuals, and then you think about how investors might partake in the platform other than trading, then there's a couple of different options there. We'll have a liquidity provider token where an individual could provide liquidity for the protocol and then earn an APY for providing that liquidity for the platform. And then we'll have a master token, so the Foxify token, which ultimately, by staking that token, you then earn a share of the platform fees. So how do we make our money? We only make our money from fees on the platform, and we only make a fair share of those fees based on the tokens that the platform holds onto and then stakes itself. So again, even the platform itself is earning its revenue in exactly the same way as anybody else that might own and then stake the token.
Right. Okay. And is there going to the Foxify? You're going to have a token, the Foxify token?
Correct.
And how will you launch that? Airdrop, or people earn it, or you're going to do a sale?
Yeah, so we're not doing a traditional pre-sale, and we'll be launching on central exchanges. That's the goal for June.
Right, and people can go and buy it off a central exchange. And then what advantages does it give traders?
Well, I suppose they're two slightly different things. Using the platform as a trader is one utility. Buying the token and then staking it enables you then to earn a share of the platform's fees. So it enables you to speculate, on the income of the platform, and then to be able to share in the income of the platform as well.
Okay, and then what about the pricing feed? Is it that especially in the beginning, how are you going to determine the price of the assets? And I suppose the principal asset would be Bitcoin against the dollar. How will you determine that price?
Yeah, it's a fantastic question. And this is one of the beauties of a decentralized platform. You use on-chain services, so things like Chainlink, for instance, which monitor the value on-chain, and you use like a time-weighted average, which also then minimizes the risk of these very sudden, very sharp movements of any asset. But it's all on-chain again. So, if you and I are trading in an option, only we can make the decision to enter that option. When the option is completed, only we can be one of the recipients, and the decision of which one is the recipient will be driven by an on-chain oracle, which gives a very accurate view of the price of that asset when our option closes. So there's no human intervention there. There's nobody to oversee that to then apply any discretion on that trade.
Right. Okay. Now you said there's no human intervention. You say the thing is that the code is open source, right? There are, however, risks involved because there could be a bug in the code. It might be susceptible to some sort of hack. what measures are you putting in place, or have you put in place to take care of that?
Yeah, and I think look, the biggest risk to hacks is where typically funds are moving from one place to another. Actually, most hacks happen either at source. I think two-thirds of the hacks within the industry in 2022 happened with bridges, because you've got funds moving across chains and using quite complex sort of like complex routing. With Foxify, it's very hard coded actually. So the funds go into the contract. The rules are very binary, and it's impossible to change those rules. Even us as owners of the contract, we wouldn't be in a position where we can rewrite those rules at any point in the future. They're very sort of hardwired. Now, in addition to that, naturally, we'll ensure that we get a couple of well-recognised audits as well, to give the market confidence that the code is just and reliable.
Sure. And I would say to people, even if the audits come out glowing and stuff, do not put in any more than you can afford to lose, because there's no guarantees in life. Any investment, even if you put it in a legacy bank, can go to nothing, right?
Yeah, absolutely. Yeah, you have to be super careful within the industry. And that's a two-way street, interestingly. It's quite common within crypto that sometimes funds get locked forever because, you can write the rules in a smart contract that's so binary that, sometimes a developer can end up down the wrong path and then never be able to actually return. I heard of an exchange recently who, they locked their funds for 10 years. And because the code doesn't allow you to change it, that's it. Come back in 10 years. There's nothing they can do.
Wow. Okay. All right. Now, how are the team at Foxify going to make money? Because you're not doing this as a charity. Why are you doing this, and where's your return on the investment?
Yeah, so for us, like anything, right? I think any startup is a labour of love for the founders and the team, and a lot of investment up front for the hope of sort of future success. So if the platform's successful, then it earns more fees, and as an organisation, we're profitable, and we're able to pay our staff. Obviously, for senior members of staff, you would also have incentives like token allocations within sort of limited numbers, and also equity. But if the platform isn't successful and isn't delivering value, then there's nothing in it for us. That's for sure.
Right. Okay. Now, for the platform to be successful, you're going to have users.
Indeed.
Right. So, and that's also important in terms of liquidity. If you and I are the only one trading on this platform, it's not going to go well. Right. And you're up against some really, really big players, established big players like Binance, and then up and coming ones like BitGet and stuff. Right. So what are you going to do to generate liquidity?
Yeah, it's a fantastic point. There's a number of different things actually. So generating liquidity and generating volume are similar things, but slightly different. So one is ensuring that you have a really clear strategy around kickstarting liquidity from day one, and that comes in a number of different forms. At one end, there's institutional liquidity, so you incentivize large liquidity providers to guarantee you almost like a core amount of liquidity. You then have sort of semi-institutional / semi-professional liquidity, where people that invest in that way and then provide liquidity onto your platform. And then thirdly is ensuring that you get in front of enough eyes and you have enough retail volume as well on both sides of that, whether you're the maker or the taker. And so there's no point in building something like this, putting it in a drawer and hoping somebody's going to come along and find it for themselves. You have to have a really robust go-to-market strategy. A couple of things there that we feel very confident about. Number one, we actually launched a project previously called MDB, which stands for Make DeFi Bet, and we launched that a week before the bear market kicked off with the Terra Luna crisis, and we actually delivered a 7x within the market. So within our little corner of DeFi, we have a very good reputation. We've delivered when most projects have failed completely or struggled, and so that means that we come into this project with a community of around 25,000 from day dot, which wow. very few people have that. In addition to that, you've also got to think big, right? So when you launch a platform, you're thinking, where do my first 10,000 users come from? And then you're thinking, how do I get to 1 million users, right? And that's your strategy. So very confident, obviously, for the reasons that I just shared in terms of the first 10,000. We've also signed Tyson Fury on a global partnership, which is a long-term deal as well. Lots of stuff in the news at the moment around Tyson Fury's World Unification fight at the end of April. So the Foxify brand not only gets a lot of exposure from that partnership, will even be on his fight kit for the fight, and there'll be 100 million eyes on the platform. So I think ultimately our goal is to be the most hyped decentralized trading platform launch in history. And yeah, there are big players, and there's people that have come in and they do a bit of what we're doing, and they're well established. I don't think anybody has come to the market in the way that we are.
Right. Okay. Now, Tyson Fury is not going to be cheap to sponsor. So where have you got the money to pay for your team? How are you funded?
Yeah, we're funded by a mix, really. So we've got angel investment from our first organisation provided the initial seed funding for us. So we're in a very strong and comfortable position from a financing perspective, and then we're working with private investors and institutional investors.
Right. Okay. All right. And then you're launching in June. Is there anything people can do beforehand, like a test net, try it out, play with it a little bit?
Not in terms of the platform. We'll release our white paper at the end of April, which is very deliberate because everything gets copied in DeFi. So we're launching with a clear sort of eight weeks before we launch. We're launching the white paper. However, hot off the press, we will be doing a free NFT mint, and then that will roll into the affiliate program actually. So details on that will be coming out very soon. And that will be launched in a few weeks. And the idea is actually that's a free NFT. People can mint that for free. It's a bit of a Willy Wonka style situation where you could be lucky enough to mint a very expensive NFT that would earn you really good discounts on using the platform. And so that would create value for that NFT on the secondary market. And there's a few hoops that we want people to jump through. So go and follow our social, sign up to our newsletter, join our community for updates. And then you can mint a free NFT and you can be part of the community and part of this movement up until when we launch in June.
Fabulous, fabulous. Now, is there anything else you want to let us know that we haven't covered? And I will have all the links in the description below.
I think, we've been in the industry a while. I think, just about us as well. I come with a bit of business experience. I've worked for a couple of Fortune 500s. I've worked for a FTSE 100. I've worked in the startup space. Always been very attracted to very progressive industries. We're extremely passionate about what we're doing. We come into the industry with lots of outside experience, and we've also got brilliant experience within crypto in the worst of conditions. Actually, you couldn't make it up. We launched our last project a week before Terra Luna. Literally couldn't have been any worse timing, and we've fared extremely well. So as a team, we're mature, we're dedicated, and very focused as well. And it's going to be a very exciting year.
Very good, very good. Well, listen, thank you so much, right, for letting us know about Foxify. I'll have the links in the description below. I do invite people to check it out, right, when it comes out. And I suppose, they can get involved beforehand, like you said, with the newsletter and stuff, and keep up to date. And I think one of the things that, apart from the fact that it's decentralized, which I think is just incredible, because that's what we want more and more decentralization. The fact that, from what you said, is that you produced a return right at the beginning of the bear market. That's quite something. That is really something. I mean, and if you can produce a return at the beginning of the bear market, then Lord knows what's going to be possible as we're now turned into the bull market. Today we're talking, I think Bitcoin a few hours earlier broke $25,000. That resistance line, up it goes, right? So that's good. Thank you. I'll have all the links in the description below. If you have any comments or questions, let me know. Please do subscribe to me on bit.ly/CryptoRichOdyssey. And between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Rich and Crypto Danny signing out. All the best. Bye-bye.